This video is about the financial system. So hey guys, I welcome you all to Dev Take Finance, and here's another video on the financial system. Let's get started with it and try to understand more about the financial system. So our agenda for this video would be we would be first discussing about the introduction to financial system, where we would try to understand what it exactly means. What does financial system comprise of? Then we would be looking at the participants involved in financial system, as we understand that any system is comprised of many elements together. So what are the components? Who are the participants which are involved in this system? Third, we would be looking at the regulatory components of financial system, the regulatory bodies who are trying to regulate whatever the functioning is going within the financial system. And finally, we would be looking at the functions of financial system. What are the various functions which is performed, which is executed by the financial system? After that, we would try to summarize all that we have discussed in the video in a brief manner. So let's get started with our first content slide, which is Introduction to the Financial System. So, financial system is further divided into components like financial market, financial intermediaries, regulatory bodies, and suppliers or demanders of fund. So, financial system is comprising many elements, many parts together. We call a system when it comprises of many elements, because it is a broader term. It is a broader term, a broader aspect to understand. So financial system involves all those participants which are somehow in one way or other way are involved in any financial activities, whether involved in investing or involved in raising finance from the market, involved in providing deposits or making deposits, or are taking loans, providing loans, any of the financial system, either involved in the brokerage activities, even that would be considered as a financial service, a financial would be a part of the financial system. So any financial activities concerned about exchange of the financial assets, the trading in the financial assets, all those activities which will be performing by any of the person, any bank, any business, any individual, any company, any corporation, or even by the government. So all those would be considered as the participant of financial system in one way or other way if they are involved in the financial transaction. Now see, we broadly categorized it as financial market. Now financial market is further categorized into the money market and the capital market. So we would be trying to understand the money market and capital market. Well, if you are having a track of my videos, you must understand that I have already discussed about the money market, the capital market, and various other financial markets in my previous video. If you haven't watched that, please go and watch that video to understand it in a better manner. So here I have taken only two, that is money and capital market, into consideration to discuss. And then talking about the financial intermediaries, so there are banks, there are mutual funds, there are NBFCs, insurance companies, and NBFSCs. So all these act as an intermediary in financial system, because they facilitate financial transactions by providing financial services. If you are having some needs of the finance, you have to raise money, you would be going to one of these institutions, one of these intermediary, because these intermediary facilitates the services. They provide you finance by taking something in return or whatever. In any means, these intermediaries get involved in providing the financial services. Talking about the regulatory bodies, so it is RBI, SEBI, Ministry of Finance, IRDA, PFRDA, all these financial systems I'm talking in concern of India. So the regulatory bodies, if we talk in concern of India, it is RBI, which regulates the commercial banks, the which is also the regulator of money market instruments. And then talking about SEBI, which regulates the capital market, so all the transactions in shares, bonds, debentures, equities, all that are controlled under the SEBI, all that are regulated by SEBI, the rules and regulations, the governing bodies are these only. Then there is Ministry of Finance, to make all the financial records and transactions for the country. And then there is IRDA, which is the Insurance Regulatory Development Authority, and then there is PFRDA, Pension Fund Regulatory Development Authority. Talking about the suppliers and demanders of funds, so there is individual, business, government. Now, suppliers and demanders of funds. So any exchange process, when does any exchange process takes place? It takes place when there is someone who is in want of something, and other person is ready to give that in exchange of another commodity which would act as a want or desire of that person. So a exchange takes place when both the desires are fulfilled by exchanging some commodities of each other's need, each other's requirement. So that is how supply and demand functions come into being. And supply and demand function of funds gives a rise to price discovery, facilitates the price discovery in the financial market. So that is how the any price of the financial asset is decided on the basis of the supply of that financial asset, whereas the demand of that asset. So we would be discussing about all these things. Let's move forward to our another slide. So this is the meaning of financial system. Let's have a look at what does the definitions and meanings talk about. A financial system is a system involving various components like the financial markets, financial intermediaries, suppliers and demanders of funds, facilitating trade in financial assets, regulated by governing bodies. So right now we have seen there were many components comprising the financial system, in which there was financial markets regulating different markets, which performs the functions of facilitating financial transactions. And then there were financial intermediaries. In simpler terms, we can call financial institutions like the banks, the mutual funds, all those. And then there were suppliers and demanders of funds. So any place, any system would come into existence only if there would be demand and supply, because that would only facilitate the exchange process. So this is what takes place in financial system as well. There are suppliers of funds, there are demanders of fund. For example, a company which requires money for investment in a new project, so it would be a demander of fund because that company is in need of that money, whereas it would be issuing shares to the public, and the public would be investing in that company by providing funds and taking that shares in exchange. So what the public would be acting as, they would be suppliers of the fund for the company. They are providing funds to the company to make the investment, and in return they would be gaining the capital gain. They would be earning some benefits out of the capital gain or dividend or anything in return. So that is how financial system acts by, that is how that is what is the main function of financial market, involving the various financial institutions. And then we were talking about the supply and demand. So this is how supply and demand is created. And about governing bodies, we discussed the RBI, SEBI, the IRDA. All these are the governing bodies because they are keeping a track over the rules and regulations of these systems, whether these systems are working well, so that no one gets cheated, and equal opportunity is provided to everyone to do the exchange process, to raise their capital, to have their benefits. This is why the financial regulatories come into existence. It enables lenders and borrowers to exchange funds, as I already mentioned. It serves as a network between all the financial institutions providing financial services to trade in financial instruments, in a way connecting demand with supply. So exactly the same meaning. It serves as a network. It provides you a network. Financial system provides you a network to all the institutions are there. So they are providing the financial services. It is providing a very easy platform to do the financial transactions and meet the financial requirements, because you are having institutions which are providing the services. You just have to invest your money, or if you want to raise your money, you just have to follow the rules and regulations. You have to go to the banks, to the publics, to the companies. There are people who wanted to invest in you, who want to provide you the fund, and in return you would be providing some sort of benefits by utilizing that funds in a better manner. So this is how financial system work, and it comes into existence to make the financial life more easier, to make everyone exchange their money, exchange their financial assets, and create more capital benefits for them as and when required. Now, let's see the participants in the financial system. So, first participant which we talked about was the financial market. Now, a financial market is a market for creation and exchange of financial assets involving various participants facilitating price discovery. So just a simple meaning, we have already discussed about financial market in one of my video. You can refer that video. So financial market is actually a place. A market is any place for the exchange of commodities. Like in the same manner, a financial market is any place for the exchange of financial assets. So when you are making an exchange process of financial assets, you are actually a participant of the financial market, and the forces of supply and demand of that financial asset will be leading to the price discovery, and that is how a price is set of any financial asset. So let's see two of the main components of financial market, that is the money market and the capital market. So money market, the market which facilitates trading in short-term securities like T-bills, commercial papers, certificates of deposits. So these securities are generally for less than 1 year, and if you want to trade in such a securities for shorter period of time to gain some benefits, so the money market is the place where you need to go on. This is one of the financial market to facilitate trade in all those which provides a platform to all those investors who wanted to trade for a shorter period of time. And then there is capital market, the market facilitating trade in long-term securities like the shares, bonds, and debentures. Coming to the financial intermediaries. So we already had a look at the financial intermediaries, which were banks, mutual funds, NBFCs, NBFSCs, and the insurance companies. So let's see one by one. A bank is a financial institution that accepts deposits from the public, creates credit, and provides various wealth management services. So previously, we used to know banks only to provide loans, provides credit, and then accepting deposits where you can put your money, and your money would be safe in that bank or something. But today, bank is more than that. It provides various wealth management services. So you can go to bank and you can ask for various other financial services. Few of the major banks which we are aware of, that is SBI, ICICI, then HDFCs, all these banks. And these serves as a financial intermediaries to the financial system. And why and how does it perform as a financial intermediary to financial system? Because it provides various services, of exchanging, of doing the financial transaction. So when you are in need of the money, you go to the bank, and this is how you are involved in that financial system, and even the bank is involved in that financial system. And because the financial service is being provided by the bank is acting as a financial intermediary. Talking about the mutual fund, it is an investment program funded by various investors creating a pool of funds to trade in financial assets. So some of the mutual funds companies are like Aditya Birla Sun Life AMC Limited, SDFC AMC Limited. This AMC stands for Asset Management Company. So yeah, mutual funds is mutual fund is investment program in which funding is collected from various investors, and then it is put into the stock market for trading, and thus you are provided with some benefits, with some returns. So for more information about mutual funds, you can refer to my video on mutual funds, where I have talked in detail about the mutual fund, how does it functions, and how it is important. Let's see the NBFCs. A non-banking financial company is a financial institution that does not have a full banking license but is registered under Companies Act, performing various banking and financial services. So some of the non-banking financial companies are like L&T Infotech, Bajaj Finserv, and Muthoot Finance. So these NBFCs, they are not actually having license to do all the full banking services, but they are registered usually under the Companies Act only. And still they provide they provide many banking services, they provide many financial services. From mid 1980s, many NBFCs have come into being in the public sector as well as the private sector. So some of the well-known names, as I said about the NBFCs, were L&T Infotech, Bajaj Finserv, and many others are there like the Kotak Mahindra Finance, IDFC, ICICI Ventures. So these companies engage in a variety of activities like leasing, finance, hire purchase finance, housing finance, infrastructure finance, venture capital financing, factoring, and investment and securities. So NBFCs provides you with various financial services, whether you talk about any housing finance, any infrastructure building, as I said, leasing, hire purchase, all these functions would be being performed by the NBFCs. Let's have a continuing with the session. Let's have a look at the insurance companies. So, companies providing insurance services as a means of protection from financial loss. Example, the LIC, Max Life Insurance, SDFC Standard Life Insurance, etc. So till recently, there were majorly only some of the players in insurance companies like the LIC, the General Insurance Corporation of India, which were having a good reputation in the market. But with the time being, with the liberalization of the insurance sector, many private sector players also came into existence, which are performing really well in in this sector, like the ICICI Prudential, Tata AIG, Bajaj Allianz, Birla Sun Life, and SDFC Standard. They have set their insurance business in India and they are doing pretty good, and they're able to compete with these companies. They provide insurance policies which usually have a substantial element of savings, and insurance premiums are payable in advance. So you are depositing your money and you are being insured for some of the risk factor involved in anything, whether in concern of life and health, education, or whatever. Various insurance services is being provided. Talking about the NBFCs, it stands for Non-Banking Financial Services Companies. This group of companies consists of merchant banks, credit rating agencies, and depositories. So, NBFCs is this group consists of, as you see, the merchant banks, the credit rating agencies, the depositories, and others. So, merchant banks are also called investment banks, and these are the firms which helps these are the firms which help businesses, government, and other entities in raising finances. They also facilitate mergers, acquisitions, and divestitures. So there are various merchant banks like Goldman Sachs Securities Private Limited, Morgan Stanley India Company Private Limited, the SBI Capital Market Limited, and many other players. You know, we when we were looking at our video in my previous video, if you haven't seen, there is one video on IPO, initial public offering, where the role of merchant banker is really important and all the functioning of merchant banker has been explained. So merchant banks facilitate these companies, the government, to raise finances in one way or other by helping in various issues. They help to raise money from the public also. So first time when the company raises its finance by providing shares, which is known as the first public offering or the initial public offering, IPO, the merchant bankers plays an important role in performing in making the draft and in drafting the prospectus, in providing the budget for all those, and many other functions the merchant banker performs, and thus the investment banks comes into being. Then there are credit rating agencies like CRISIL, CARE, and ICRA. So credit rating agency is any company that assigns rating to debtors according to their ability to pay back the debt. So on the basis of the credit given by these credit rating agencies, you can decide whether those debtors, which could be the company, which could be any corporation, any bank, whether those debtors would be able to pay back your debt or not. If the credits provided is good, if the rating provided is good, you can trust those companies. And these agencies provide highly essential risk assessment reports and assigns various credit score on the basis of the company's ability to pay you back. So what does CRISIL stand for? It is Credit Rating Information Services of India Limited. And ICRA stands for the Investment Information and Credit Rating Agency. Likewise, CARE, CARE stands for Credit Analysis and Research Limited. So these are some of the credit rating agencies which form a part of our financial system, and they act as the financial intermediary. Let's see depositories. So there are some depositories like NSDL and CSDL. NSDL stands for National Securities Depository Limited, and CSDL stands for Central Securities Depository Limited. So depositories are institutions which dematerialize physical securities. So when we were talking about the Demat account in one of my video, there we saw that these depositories plays an important function where your Demat account should either be registered by NSDL or should be registered by CSDL. So that's how your securities are held in electronic form, in the dematerialized form. And what does these depositories do? These depositories provides a transfer of ownership by electronic entries. So when you exchange the shares, these depositories come into existence, and they would facilitate the transfer of the ownership from one party to another. Let's have a look at the regulatory bodies involved in financial systems. So starting with RBI, the Reserve Bank of India is India's central banking institution which controls the issuance and supply of Indian rupee and serves as Bankers Bank. It was established in 1935. So as the central banking authority of India, the RBI performs many functions, like it provides currency and operates the clearing system for banks. It formulates and implements monetary and credit policies. It functions as a banker's bank. So all the banks, if they are in a requirement of fund, they would be going to RBI because RBI acts as a central bank. So when there would be requirement of fund by all the other commercial public banks, they would be moving to RBI. And RBI also supervises the operations of credit institutions and the foreign exchange transactions. So there are various functions which is performed by RBI, and as I said, it also acts as a regulator of the money market instruments. When you are trading in money market instruments, RBI is the regulatory body over there. Talking about the SEBI, the Securities and Exchange Board of India has been entrusted with the responsibility of dealing with various matters relating to capital market, founded in 1992. So the work of SEBI is to regulate the business and stock exchanges and various other securities market. It regulates how does the capital market functions, and all the intermediaries involved in capital market like the brokers, the merchant bankers, the portfolio managers, whether they are performing in an ethical manner or not. So this is all regulated by SEBI, the Securities and Exchange Board of India. It also register and regulate the working of mutual funds. And SEBI controls many stock exchanges like the Bombay Stock Exchange, the multi commodity exchanges, the NCDEX or NSE, all the foreign and derivatives exchange comes under SEBI. And SEBI is responsible to make the guidelines for all those exchanges. There are about many listed companies which are regulated by SEBI, about 290 merchant bankers, the investment funds providing companies, the stock brokers and sub brokers, all those are regulated under SEBI. And SEBI prohibits insider trading in securities. It prohibits any kind of unethical activity. It regulates and makes various rules and regulations for the working for the fair trade practices in the securities market. Coming to the IRDA, this is the Insurance Regulatory and Development Authority of India. It is an autonomous and statutory body tasked with regulating and promoting the insurance industries in India and was founded in 1999. So, from the definition only, you could understand that this regulatory body governs the working, governs the principles, governs the rules and regulations related to the insurance industry. So whether they are fulfilling all their rules and regulations in a proper manner to facilitate the financial services to the public, these all are taken care by IRDA. That is the Insurance Regulatory and Development Authority of India. The next is the PFRDA, the Pension Fund Regulatory and Development Authority. It is also a statutory body and it governs the pensions. It governs the rules and regulations related to the pension funding. And it was established by the Government of India in 2003. Let's have a look at the functioning of the financial system. So from till now we have understand what are the various components, what are the various elements involved in financial system and how does they are involved in one way or other, either the financial market talked about or the financial services being provided like the advisory services, the depository services, the investment services. All those financial services are involved. There are various financial institutions involved like the banks, the mutual funds, and then we talked about various other regulatory bodies in financial system. Now we get a better understanding about financial system to discuss about the functioning, so we can make a picture of what are the functions of financial system. Thus it provides a payment system for the exchange of goods and services. Yeah, so financial system acts as a payment system for the exchange of goods and services. Right, because when a financial system comes into existence, there is being an exchange of the financial assets. A exchange process is taking place. As I talked about the supply and demand, so there is an exchange happening. And what does financial system do? It provides you a payment associated with that exchange. So when you are providing some funds, you are in back issuing shares or bonds or anything, any certificates, so that you are regulating that you would be paying the interest, you would be paying the benefits related with that investment which is being made to you. So that is how financial system provides a payment system. Second, it generates information that helps in coordinating the decision making. So it also generates information because everything is clear. Like there are financial institution which you can have knowledge information about through either from the internet or by being a participant of that system. You are having various information whether to make the investment, how to raise the funds, and who are the parties involved, what are the rules and regulations. So various other informations you are well informed of, and that is also mandatory for various financial institutions to make you inform of all the financial services being provided. Thus you are having information which would help you in coordinating your decisions, in taking a very informed decision for your financial assets to be upgraded. It provides a way for managing uncertainty and controlling risk. So yeah, there is almost three basic methods for managing risk, which are like hedging, diversification, and insurance. So where hedging entails moving from a risky asset to a riskless asset. For example, a forward contract in which a contract has been made in the present period of time, but in forward you would be exchanging whatever for the benefits of one another, trading in the financial asset. And then there is diversification, which involves pooling and subdividing risk, pooling of various funds and then investing into diversified portfolios so that the risk is diversified and thus better returns could be entailed. And one more way which I talked about was insurance. So insurance also, it works as a risk management service. It enables the insured to retain the economic benefit of ownership while laying off the possible losses, whatever happens. Financial system also enables the pooling of funds for undertaking large projects or setting up businesses. So many businesses, when they want to raise funds either for their expansion or for any new project which is associated with their business, they need a huge amount of funds. And for this, they could either go to the bank to raise loan, or they could go to the public to raise funds by providing equity shares, by providing ownership in the company, or any other form. They could go to the any other corporation to raise funds from. So these all are participants of financial system only. So what is financial system doing? Financial system is enabling the pooling of funds for all those people, for all those who would be in requirement of funds to do any project, any kind of project. It provides a mechanism for transfer of financial asset and helps in reducing the cost of transaction. So because of the presence of various financial institutions, somehow your transaction cost is being minimized. Because if you wanted to invest in stock market, going directly to the stock market, you are either way going to the banks which are acting as a financial intermediary, and or to the mutual fund companies. So there you are investing in the stock in an indirect manner. Thus they are helping you reduce the cost of transaction also. And because of all those financial intermediaries, your cost of transaction is being reduced because you are being well informed by them, and your financial assets, your investment is being taken care of by them. It serves as a source of capital formation both for the individual as well as the economy. So, yeah, financial systems provides a better platform for the development of not only the individual, also the economy, because the individuals they are concerned about their development in terms of returns or benefits, but it also helps in capital circulation in the economy. In more capital circulation, more capital generation. So somehow it entails a habit of not just saving but investment in the economy, but a habit of growing funds, a habit of creating more capital, capital formation. So this is how economy is also overall being served. So, guys, this was all about the financial system. I hope you understand about the financial market, the financial intermediaries, and the various functions performed by financial system, the various regulatory bodies. All those things together comprises of a system where the financial transactions takes place, and along with that your safety, various rules and regulations are also entailed in that whole system. So this is how financial system comes into existence and it works. Thank you for watching. I hope you liked this video. Thank you for watching Dave Take Finance. Do like, share my videos and subscribe to my channel for more videos. Thank you.